Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week. We only have a couple of things to talk about this week. First up is what's up on the economic calendar this week. First, on Tuesday, we're going to see building permits and housing starts numbers. Now, these aren't necessarily critical numbers, but they do give some key insight as to what builders and the construction labor market are looking like for the months coming up ahead. Next, on Wednesday, we have two key things happening. One regarding retail sales to see how the United States consumer is spending money in the marketplace and whether that's increasing or decreasing. And the other thing is we have the release of the Federal Reserve's meeting minutes from their previous meeting, where they announced their 75% basis point hike and that they were going to continue fighting inflation with all they've got until it gets back into the zone that they're shooting for. Of course, we already know what happened from the last meeting, but when they release their minutes, there tends to be a lot of jockeying and repositioning in the market based on the details of that meeting, what was said, by who, and what their forward guidance looks like in optimistic or pessimistic ways. And then on Thursday, we're going to see some unemployment figures, we're also going to see existing home sales, and we're also going to see mortgage delinquencies, all which of course have a varying degree of weight in the marketplace and whether rates go up or down. But when you take all these into context, of course, it further paints a picture and clarifies where we're at this point in time. Last week, we already saw that rates were kind of up and down, up and down. They actually ended up higher last week than they were the prior week. And now we're entering yet again another little bit of a holding pattern until we get to the September meeting, where now the sentiment about their rate hike has changed once again. It was believed just until about a week ago that the Federal Reserve would have to bump their rate by 75 basis points again in September, and now that's gone down to 50 basis points. A lot of this is pointing to the fact that the inflation was more muted in the July reading than it was in the June meeting. In June, the inflation year over year was 9.1%, and in July, the reading year over year was 8.5%. So it appears that it's crested and it's coming back down a little bit. However, I'm not going to put all the eggs in that basket because that doesn't mean that it's just going to go down that direction. It could be dipping just for another increase up ahead. We don't know yet, and we have to wait and see. So the Federal Reserve coming out with their meeting minutes is going to weigh in on that, and that's going to kind of pitch the direction of rates this coming week for those of you who are looking to lock your loan or get approved. As we've been saying for several weeks now, make sure you're getting approved with a interest rate that's present today, but also hedging it an eighth or a quarter higher or an eighth and a quarter lower, so that at the point in time in the process when you're locking your loan and it's in your favor, you know what you're looking at, or if it's moving against you, you also know what that means to you on your monthly budget. And the last thing for today is I want to point your attention back to the video that Memo and I did over here talking about the home equity line of credit. We know that for those of you that are homeowners, not everybody's in a position where they want to do cash out because they have secured a very, very low 30-year interest rate loan, but they also have a lot of equity that they might want to convert and use to pay off debt, consolidate, update their house, remodel, or do additions like an ADU, things like that. We actually have a home equity line of credit product coming on board, and if you missed that video from last week, you can go ahead and click in the banner up to the right, and you can watch that video, and then contact William and let him know what you need in order to get that process started today. As always, thank you so much for watching Monday Mortgage Minute. Please share this video with people you know, like, and trust. Make sure that if you have a situation that you need your help with, please ask us a question, make a comment, send a DM. You know, it doesn't cost anything to call and ask a question, but it could cost you thousands if you fail to ask. We have been through difficult times in the mortgage industry before. And what we found is that most people who waited until too late to start getting help, it was already too late. Now, those of you who might be feeling a little bit timid or hesitant to step forward and say, hey, I might be having a problem, or I'm trying to avoid a problem that might be lurking ahead, ask those questions today so we can better help you find out what's the context of the situation, where are you at, and what products and solutions might exist in the marketplace to help you out before it's too late. Thank you so much for watching. If you haven't yet subscribed to the channel, hit that subscribe button so that every time we drop a new video, you get notified first. We will see you again next week.